Market Shots are short video segments designed to help you develop a trading strategy that you can stick with. Here to help you is the Chief Market Strategist for the Market Guys, A.J. Monty.
Well, I hope you're getting a lot out of these short video strategy discussions, because I'm sure having a good time teaching them to you. You know, this is a chart of OIH. Now, I've taken out the timeline, and I've taken out the volume, and I've taken out the price axis, and I really want you to focus on this blue line that I have drawn on the chart. This simple moving average is nothing more than a 20-period moving average. Now, right now I have the chart set at a daily chart interval. You can also do this on a weekly chart interval if you want to go longer term in your strategy. But I would suggest for this particular lesson sticking with the 20-period moving average on a daily interval chart. Now, the concept here is very, very simple. It's a strategy that will help you stay disciplined, and it's also one that will help you stick with something that's consistent. You simply buy the stock when it moves above and closes above the 20-period moving average, and you hold that stock until it closes below. Now, here's the key. It has to close above to initiate, and would have to close below to exit. Now, in the process, while you're waiting for the stock to move lower, you're going to set a trailing stop somewhere below your moving average, and then let the technology in your trading platform, in the form of a trailing stop, move the stop up with the price of the stock. Now, I'm going to zoom in just a little bit here for you so you can see exactly what I'm talking about on some of the past price movements here. Now, again, going back to this area right here, you see a bullish engulfing pattern, and the very next day you see a green candle which closes above that moving average. So here's the day that you're going to buy right there on that candle. You're going to be buying on that candle, and then you're going to set your stop right below that moving average. Whatever the price difference is what you leave it at. So if you buy this stock at, I don't care if it's $20, you buy that stock at 20, you're going to set your stop somewhere below the 20-period moving average. If that's 17 or 18 or 16, it doesn't matter. You're putting your stop below that moving average, and you set the platform to trail the stop on the way up. Now, what does a trailing stop do? It moves up as the price of the stock goes up. Now, you might have gotten stopped out somewhere over here, or maybe over here. You see, the trailing stop is moving up with the price of the stock. Now, if you're a risk taker and you would like to short the stock and make money on the way down, the opposite would be your strategy. So in other words, you wait for the stock to close below the 20-period moving average. Remember, close below the 20-day moving average. You short the stock and you set a buy stop above. Now, this, I don't know if that's an accurate high for that particular day. If it was, you would have gotten stopped out the very next day, or the next bearish engulfing pattern when you got back in. But as long as that stock is below the 20-period moving average, you're staying short, and then eventually your buy stop will kick in and get you out. Now, this absolutely works much better when you are in a trend. See, right here, we're looking back to a point in time where this would have been your buy point. You would have set your trailing stop down here, below the 20-period moving average. You still would be in this particular stock right here. Now that the stock has gone and moved dramatically higher, there's a very good chance that your stop will also be somewhere in this particular area, because remember, it's trailing by a particular spread in points, or you could also set your trailing stop in percentages. Again, I know this is a very short lesson, but we do cover this quite a bit in more detail in our open house discussions, which is the first Monday after every options expiration Friday. Details will be on the Market Guys website, so stay in touch, stay in tune, and keep those stops in place.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.